Hey, Syndicate members, Akil Stokes here, and wanted to give you a nice quick setup that I was watching on Pound Out. Now, this is a purely structure-based trade, and it goes back to just being able to read a market. Um, and we take a look at what Pound's been doing. We've been trending up. We were in a little channel trending up. We just broke through that, but we've basically been making new structure highs, followed by outside return or a pullback, followed by higher high, higher close, some more new structure highs, pullback, new structure highs, etc., etc., etc. The basic definition of an uptrend. Um, and looking now, if we go to a daily chart, there's not a real level of structure here that I'd like for the market to really turn around. There's some junk in here, but not too confident that this is going to be the say all turnaround spot for this market. If I had to make a better guess, I would say we probably come up and maybe test this inside level right here, but that's doesn't make a difference right now. What I'm looking at is basically a potential structure-based trend continuation trade, which is going to have a great risk-reward ratio if we can get it. We know that if we're in an uptrend, then we shouldn't break previous structure lows, correct? I mean, if this trend is going to continue, we should not break these previous structure lows. So if price action pushes down to this DSR level, pushes down to these previous lows, looking at 52.26, and we can even create a bigger zone if we want to take our Fibonacci retracement out and bring in an 886 is going to be right here, and then maybe let's say we take a Fibonacci extension from swing high to our most recent swing low. We basically have a zone of 886 and 127 confluence here, but we have a zone between 152.44 and 151.97 for a potential long entry. And what's so great about this is, again, stops only need to be probably right down here. So if we're entering, let's say we enter right to 886, we get a little high entry here. Stops only need to be below these structure lows, because if those are penetrated, well, then our reason for being in the market has proved to be wrong. So we're looking at a risk of about this much, and really a reward of a retest of this DSR level up here. Looking something like this. So whether this is the greatest ranked opportunity in the world, check out the risk reward. You're getting at least a 1, 2, more than a 3 to 1 on this risk reward. Now, even if you're a little safer, say you're shooting for a retest of this structure right here, 54.70s, you're still giving yourself a great opportunity. So we'll see if the market pushes down, but again, just a structure-based trade. I would wait till the price action comes into this level. As always, I'd use one of your entry techniques. If you're a super aggressive trader, then just buy it up at market. If you're more conservative, wait for a higher high, higher close. Use that technique, or maybe a 3-bar reversal. Wait for a double bottom with RSI divergence. Whatever you need, whatever it says in your plan that you need to enter this trade, that's what I would wait for. But once we get in this zone again, especially between 52.44 and just say 52 even, you want to pay attention to how price action reacts, because if we can hold this level, again, you may be setting yourself up for a steal.